Hi everyone, and welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the main board for the New Zealand Stock Exchange. Before we go across and do that, just a couple of things that I would like to let you know. First one is the offer for my monthly money map is still available. Would love for you to download it and see if you can find any little tips and tricks, any spending leaks that you may have in your own budget that you might then be able to put aside for potentially further investing. I've had a great result with some other clients in the last couple of weeks. They've found themselves over $2,000, which was absolutely magic to them. That's over a 12-month period. So download that. That's at the end in the show notes. The other thing too is just remember, if there is anything that you would like to know regarding the share market, whether there is a stock you would like me to review, an indices or an ETF, anything like that, again, pop it in the comments because I'm happy to do a review on that. And if there is just even any general queries about investing, by all means, reach out, let me know, and I want to actually empower you to be able to trade in a successful way. So let me know and we can do some education around that. Right, let's take a look at the performance for the New Zealand main board. Just remember though, this is education only, definitely not personalised financial advice. Right, as you can see here, I have got the main board for the New Zealand Stock Exchange up here on the screen. And interestingly enough, these last two candles, I'll just zoom in, that green one was actually for the entire week last week. However, that red one is just for Friday's trading. So you can see Friday came down, but the week overall has been a slightly positive week. So that's just something to keep in mind there. Let's put our moving averages on and just see what they are actually telling us. So like normal, I use the 30 exponential. And there you go, basically looking at where that red candle is, it's closed on that 30 period moving average. Now, for me, that is a warning sign. For me, it means definitely not entering into any new positions. It could be a sit back, wait and see. I'm definitely holding any positions and changing my stop losses, but it means I'm not entering into any new ones. But let's also put on that 15 period moving average and just see how that compares as well. And you can see the 15 period moving average, which is on a weekly basis over the 5 years, is that blue line. And you can see that last week, the market for the New Zealand NZX50 has closed below that. So that too is a definite red flag for me. We'll just jump onto the yearly chart, which brings these candles up to dailies, and it just gives us a little bit bigger picture because they're fast moving averages. And you can see here, this is really quite interesting. So on the 13th, which was over a week ago, we had a big sell-off that particular day. Market opened again on Monday and there was a further big drop, and you can see that big gap. That's a really, really negative sign. Tuesday, when the market opened, it was positive, which is good. We had a huge positive gap because the market then closed up again on Wednesday, and you can see that great gap. That is normally a healthy sign. However, we've now got two red candles in a row. And to me, that is an automatic stop. I never want to look any further for any trading opportunities when I see two red candles like that in a row. And given that the market on the daily basis is trading below both of those moving averages, that is a negative sign. And given the fact that the moving averages have crossed to the downside, so this is where the 15-day in this example is trading below the 30-day moving average, and that happened around the 27th of January. The market is trading below both of those, so that is definitely three knockouts that I would have for the NZX50 at the moment. Let's go back to our 5-year chart. Now I'm just going to pop on a ATR, which as you can see here is the average true range, and I'm just going to put that over a 21 period. Now what that does is it brings it up down the bottom, and you can see at the moment it says 239.39. The ATR is really a volatility measure, and so what it's saying is that, because I've got this on the weekly chart, on average, in any 1 week, you could expect the New Zealand Stock Exchange, the NZX50, to move about $239 in any 1 week. Now, that's not to say that that's set in stone. You can actually see that there might be periods, or there are periods where it's higher than that, and of course periods where there's lower than that. But that's an indicator to see how much volatility there is in the market right at the moment. So what I do is I take that figure, 239.39, and I divide it by where the current share price is, or the indices. So at this stage, it's at 13,308.52. We'll pop that into a percentage, and it works out at just under 1.8%. So there's not a lot of volatility in the market. For me, I'm looking to see, when I look at that volatility measure, to make sure that there's less than 5% volatility in the market. The moment there's 5% or more, that too is an immediate stop. So depending on what sort of format you use when you're evaluating the indices, or in this case, the NZX50, will depend as to where the knockouts are. So that ATR, that volatility measure, that would pass for me at this stage. But the fact I've got those moving averages on, we've got 2 red candles in a row on the weekly chart. The market is trading below both of those moving averages, also on the daily chart, and the fact that they have crossed to the downside is definitely a negative for me. And on a weekly basis, which I've got up here on the screen now, the market is closed below the 15-week moving average. It's only just above that 30. So at the moment, that would definitely be a knockout, and would mean that I wouldn't be going any further into the New Zealand market. So it means I would not be looking any further for any new potential holdings that might be available. I'm still holding shares that are in there, because even though you can have the overall market showing one thing, quite often there can be individual shares that will demonstrate alternative behaviours and could in fact be going up. So those are the ones that I'm increasing my stop losses on and riding them until obviously they do hit that stop loss, because I never want to pick that top of a market. I want to wait until a share starts to come off, and it will come down to where my stop loss is and take me out of the market. Happy to give a little bit more education around that if that's what you would like. But hey, next week, I have heard actually that on Monday, so yesterday, that Rua Gold is a new listing for the NZX50, which is fantastic. So what I will do next week is, for share and review, we'll take a look at Rua Gold and see how that's been going. It will have been going just over a week at that stage. Come back on Thursday, because I'm going to take a look at Rocket Lab, which is a New Zealand company. However, they are listed on the US Stock Exchange. So we'll run my methodology over it and see how it comes out. I'd love to see what you think. So until Thursday, take care.